And in my view, President Trump is quite committed to his tariff plan. He has a number of objectives he's trying to achieve, but there's no doubt that the volatility in bond markets over recent weeks has given him pause for thought and forced him into at least a change in approach and a slower approach towards his tariff plan.
Last week, you wrote that the era of international free trade was dead and buried. Does that remain your view, even after the pause in some US tariffs?
Look, what we've seen in recent weeks has been quite extraordinary in global markets. We really are seeing the global trading system and the global economy that we've become accustomed to being rewritten in front of our own eyes in a really rapid pace, at a really rapid pace. And so I do think we are seeing a fundamental shift in the global economy that will have ramifications over at least the next decade.
What do you think is the economic endgame for the Trump administration?
Look, I think what the president was trying to achieve, I think there's 4 objectives that he was trying to meet in pursuing this tariff plan. He has promised to bring back American jobs and American industry. Tariffs was his way of delivering on that promise. He also talks a lot about the revenue that will come from higher tariffs over time, and that's one way that the US president can help to repair the budget position in the US without needing the approval of the Congress. I think also from a national security perspective, in the US, they are trying to onshore and bring back some of those critical supply chains, and that's been underway for some time, but the president saw tariffs as another way of pushing that ahead. And he's clearly also using tariffs and the threat of higher tariffs as a leverage tool to achieve a range of US interests. So I think there's a number of reasons why he's pursuing this plan and will remain committed to it over the longer term.
Is it going to work?
I think it's going to be very challenging. Achieving those goals is not easy, and the global economy is quite good at adjusting to changes in tariffs. That said, the US is a huge market. It's still the largest consumer market globally, accounting for around 25 to 30% of global demand. So opportunities to avoid these tariffs is going to be quite limited compared to previous trade wars. And it's clearly doing significant damage to the US economy in the meantime. So I think we still have some way to run before we see where it lands, but it's not clear to me that all of those goals will be achieved.
Well, on that point, amid the volatility, is the cost of the US government's borrowing going to continue to go up?
The bond market has been really interesting. We've seen a very different set of circumstances to what we are used to seeing in these sort of episodes. Normally when you see a shock to the global economy, there's a flight to quality, a flight to safety, and that sees people move into Treasury, long-term Treasury dated securities. You see the US dollar strengthen and bond yields tend to fall. Here we've seen the exact opposite. So I think that means if that continues, that certainly does mean that the US will face higher borrowing costs over the longer term, both for the government and also for the economy more generally.
What does that tell you about how the world views the US as a future economic power?
The US role as a global leader in free trade, as a defender of global institutions, is being brought heavily into question. And I think investors are asking themselves the question of whether the US can still be trusted in the longer term. Now, I think fundamentally the US still has many strengths, and this period of volatility will pass as we move forward. But there is no doubt that some damage has been done to the US's reputation as that global leader in the global economy.
What does the US-China standoff, since now both have steep tariffs on the other's imports, mean for Australia?
I think overall Australia is actually well placed. If there's any good news from a trade war, it's that Australia is relatively well placed and insulated from this overall, but we won't be unaffected. And the 2 key channels that we will see those effects flowing through are confidence. If we continue to see volatility and if the trade war between China and the US continues to ratchet up, then that will affect broader consumer confidence and business confidence here in Australia and feed into growth. But you mentioned China. China is really the key channel for Australia, the channel through which we'll be affected. And if China's economy does slow sharply, which higher tariffs in the US could see, then that will flow through to commodity exports in Australia.
Does Australia need China to get out the big bazooka to unleash some really significant stimulus?
That's our view. Our view is that China will act strongly. The Chinese government will act strongly to support their domestic economy.
How much do you think it's going to need to spend?
I think it is going to need to spend a significant amount. It's fair to say that the Chinese economy was already struggling to gain momentum for some time in recent years, and this is now another challenge for them to overcome. It will make it hard for them to achieve their 5% growth target, but the authorities in Beijing have said clearly that, 1, they're going to fight to the end against the US to win this tariff war, and 2, that they have the ammunition, they have the firepower necessary to defend that 5% growth target. So for us, that means more support for the Chinese consumer and also more fiscal spending, including in areas like infrastructure, which will provide a buffer for Australia's key exports.
Barclays is estimating that it's going to need to spend some 12 trillion yuan to underpin that 5% growth target. Are there reasons why it would decide not to spend that much?
Look, I think it will be a big number. Exactly what the final number is hard to predict, but I think China will certainly spend a substantial amount to ensure that its economy remains strong during this period. And we also expect them to front load that support as much as possible to ensure that the economy doesn't dip too much in the near term.
Is there reason for the Reserve Bank to cut by 50 basis points at its meeting in May?
At this stage, we don't think so. I think at the moment we're still predicting a 25 basis point cut. Governor Bullock has said that we should take a patient approach and we should see how this trade war plays out over the coming weeks, given there is so much volatility. We have continued to see inflationary pressures ease in Australia in line with our expectations, and that does provide room for a cut. And now with the global factors coming into play as well, we think there's definitely a clear path for a 25 basis point cut. But at this stage, we don't think a 50 basis point cut is warranted.
And how much more room do you think there is to cut further and later in the year?
We still expect a further 50 basis point cuts on top of that initial 25 basis point cut in May. But we'll have to watch very closely to see whether or not the global trade war improves or deteriorates from here. And to the extent that we do see a broader weakening in global economic activity, that does give, I think, the Reserve Bank more room to step in more aggressively if necessary.
Luke Yeaman, thank you for joining the program.
Thank you, great to be here.